Consumption. When you spend money, that's called consumption. And you are a consumer. You are a consumer of goods, all right? And when you buy things, that's called consumption. Now, that's the second thing that you can do. The third thing that you can do is you can save it or give it to Uncle Sam in the way of taxes. Yes.
What's consumption again?
Right here, spending. You're spending money. All right? You're spending money.
When money leaves you.
So you spend money you can save or manage right now.
Yeah.
So
The first one is import, when you're buying import, right? The second one is consumption. You're buying anything. You know, you're buying stuff. Food, clothing, whatever. And the third one is taxes. You have to pay Uncle Sam taxes. And the fourth one is you can save it. You can put it in a bank down here. Put it in a bank. Okay. Now, that's what you can do. And that's all you can do. That's all you can do. So, now, you come over here and you will buy in a market. We have 3 markets in the economy. 3 different kinds of markets. And that's by the green boxes you see here. The first one is product market. You can buy products in the product market. Isn't that brilliant? That's the way we work. All right? That's where you go to buy products. Goods and services, in other words. Now, over here, we have 2 markets. We have credit market and factor market. The credit market is where you go to buy credit. Or, in other words, you go to buy money. When you borrow money, that's the same thing as buying money. And guess what the cost of buying money is? Interest. The interest that you pay back. You know, obviously you have to pay it all back, but you have to pay it all back with interest. The interest is the cost of borrowing money. Right? And when you save, then you don't have to borrow. You can fall back on your savings if you desire to do that. All right, and that's the credit market, which is kind of like a bank. Now, the other market is the factor market. That's where the factors of production are located. And business has to go to the factor market to buy those factors of production to produce their products. One of the factors is labor, which is you, or us. You know? Now, to put it in very blunt terms, we all come over here and sell our body to the highest bidder.
Yeah.
Yes? We sell our body to the highest bidder, and in exchange for doing that, we get wages or salaries, you know, however you want to put it. But that's your source of income. That is your source of income, your labor. All right? When you sell yourself to another business, you're selling them your effort, your labor efforts. Okay? That's a factor. Okay? And that's your source of income. That's where the money comes from. That's where all the money comes from. Okay? Everybody clear on the 3 markets now? All right, let's come over here to business. How does business work? Well, business works very similar to a household. You know, they come out here and they come to the factor market to buy the factors of production. They buy the natural resources, the capital, you know, the buildings, the real estate for their factories, and the labor. And their biggest cost, remember, is labor. Always going to be labor, the biggest cost. All right? But that's their cost of production. That's what it costs to produce their products. Okay? Now, their source of income is called revenue. They take their products over here to the product market and they sell it. The money they get from selling their products is called revenue. Hopefully, revenue is going to be greater than the factor payments. Revenue will be greater. If it's not, you're losing money. And you're going to be looking for a new job soon. Because the whole idea is profits. The difference between this number and this number is profit, which is good. Occasionally, if a company is doing really well, really good profits, they will take some of that profit and invest it back into the company. Buying additional equipment, newer equipment, maybe enlarging their factory so that they can produce more, and by producing more, make more profit. That's what we call investments. That's called investments. When you go back to the product market, buy those things needed to increase your level of productivity. That's investments on the part of the company, okay? Now, the business also pays taxes, not as much as we do, but they pay taxes, about 11% to be exact. This represents about 50%. Now, let's talk about the last sector, which is government. The source of income for government is what?
Our tax.
You bet. Not just us.
Our tax.
I mean, they get taxes from business as well. That's their source of income. They take that money, they turn right around, and they go to the same product market you and I go to, and they buy things, just like you and I. But they buy in much larger quantities. Much larger quantities. All right? Now, if these two figures equals this, we have what is called a balanced budget. We have a balanced budget. We haven't had that, by the way, in what, 12 years?
You said if what equals what, Mr. Davis?
If the amount of taxes coming in equals the amount of spending going out, then you have what is called a balanced budget. And we haven't had one of those since 1999. All right? So it's been a while. Yes?
Incoming taxes for both business and household or just business?
Both. Yeah, both.
So now it's, the government spending is more than the taxes?
Yeah, well, what happens if taxes don't equal this, and we continue to spend, then government has to go and borrow. You know, they have to borrow more money to make up the difference. And this borrowing from the credit market is what we call deficit spending. Yes.
Okay, so, remember last year you were talking about, I don't remember who said it, but they said if you spend more than what the government has, in times of, I think, poverty, it will try to, it'll put the central balance back into.
If you spend more than you have, you're going to create a humongous deficit
Yeah, so that's
for that year. And accumulative, you're going to create a national debt, which is going to be very big.
You said it's about
so that's just starting to.
Oh, yes, because it devalues our money. It makes our money worth less. President said, well,